All right, so we look at 8.2 here in Workplace 30. We're operating a small business. So in your notes that you'll have in front of you, you should have definitions of revenue, fixed expense, and variable expense. So let me just zoom in here just a bit. So revenue is pretty simple. That's the amount that is earned through the sale of goods and services. So that's the money that you take in. That's revenue. An expense is something that you pay out. Okay? If something is expensive, it's something that you have to pay a lot of money for. So an expense is something that you have to pay for. A fixed expense is an expense that occurs regularly and the value does not change. Okay? So it occurs on a regular basis and the value doesn't change. So some examples of fixed expenses might be your insurance premiums for your small business, or your rent, or something like that. Maybe a vehicle payment or equipment payment, or something like that. Those would be fixed. You know every month it's the same. Variable expenses would be expenses that change in value because of the nature of what they are. For example, maybe fuel expenses. Maybe it's material, because in the Christmas season, your business, you're making nativity scenes or something, so you're really busy at Christmas, so you have to buy a whole bunch of stuff, so it's a variable expense maybe for material. But in the summer, it's a little quieter, let's say. Okay, so fixed or variable expenses, that's important, and revenue, of course, is the money that you bring in. All right, so example number 1, we talked a little bit about this with some of you already that were here, and maybe you've done this question already, but Rafaela runs a catering service, preparing and delivering frozen dinners to the elderly. During the past month, she listed the following items in her financial records. So A, indicate which items are revenue and which items are expenses. Calculate the total for each category. So let's do revenue in blue. Okay. And so the money that she brings in. Okay, so groceries. Well, that's money that she pays out, so I don't think that's a revenue. Payment from Mrs. Harrison. Well, that is coming in. So that would be a revenue. Gas, nope, that's not a revenue. Payment from Mr. Dorn. Food containers, I'm assuming she's buying those, so that's not revenue. There's another payment. Oh, here's another tip, so that's coming in. So again, money coming in. No groceries, that's going out. Car insurance, that's going out. Check for Mrs. Rogers. Okay, these are all revenues I'm highlighting right now. Oh, a refund. That is money coming back in. You've been refunded that. Payment from Mr. Oswich.
Wouldn't it be no, it'd be a refund to.
Oh, 2, it says 2, right, you're right. So that is not 2, that is, who's Mr. Zibbit? Do we have Mr. Zibbit? Oh, okay, I haven't seen Mr. Zibbit yet, okay. So it's a refund 2, thank you. Get my glasses changed here. So a refund coming into you would be revenue, but refund to Mr. Zibbit, that's paying out, you're absolutely right. Employee salary, that's going out. Payment from, that's coming in. Monthly fee pay for advertisement, that's expense. Telephone bill, expense. Payment from, that's a revenue. Payment from, revenue. Okay, good. And then all the other ones would be expenses. Now, fixed expense, let's mark these as fixed or variable. So fixed or variable. Let's do fixed in blue. Which one of these do you think would be fixed? Would groceries be fixed?
No.
It depends on how much you eat, I guess. Gas, depends on how much you drive. What about food containers? I guess that depends. It depends.
If they're buying the same amount.
Yeah, it depends. If it depends on the jobs that you get, then that could be variable, I would say. So groceries, again, that's obviously different than the first one, so that's going to be variable. Car insurance, that might be a fixed one. Good. Refund to Mr. Zibbit, is that going to be fixed?
No.
Every month, Mr. Zibbit gets a refund. No, okay, so no. Employee salaries.
Fixed.
Okay, so if... I guess you could call that fixed. If it's wages, that's per hour, usually wages. Salary is per month. So I suppose I would probably lend this one to be fixed. Yeah, that'd be a good one to say fixed. Monthly fee paid for advertisements. What do you think that one would be? Yeah, I think fixed too. Telephone bill, flat rate plan.
So wage would be variable?
Sorry?
Wage, like this one's employee
Okay,
salary.
yeah. Okay, so going back to the salary. So your wage is what you make per hour.
Yeah.
Your salary would be what you make per year or per larger amount of time, so per month. And a salary is generally fixed. You make this much a year. And so that's divided into months usually or something like that. And then, so that would be fairly fixed. If it was wages, you might bring people in for busy seasons and your wages might change. It depends on how many workers you have. But I think, because I say salaries, I would say that that's probably fixed.
Okay.
Does that make sense?
Yeah.
Good question. All right, flat rate plan for the bill, I think that would be fixed too. So that's not dependent upon the calls you make or where you make them. Good, and then the other ones would be variable, 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 and so on. Yeah. Okay, and then you have a question to try on your own as well. It starts with, well, depending on what notes you have, you'll all have this one. Sam runs a graphic design. Okay. So we'll let you do that one on your own. All right, let's talk about let's move on though for the purpose of the lesson. Let's talk about the break-even point. Where is that? New skills. There we go. So profit and break-even point. Profit is the amount by which revenue exceeds expenses. So when we talk about profit, or a business talks about profit, they're talking about how much more revenue they have than expenses. So revenue exceeds expenses. If you have a loss, that means your expenses have exceeded your sales or your revenue. And the break-even point, you guessed it, the point at which the expenses equal the revenue. So profit, you make more money, you make a profit. You suffer a loss, that means you've actually spent more money than you made. And break even is when they're exactly equal. So when you're looking at a business, you want to keep careful eye on where your break even point is, right? So you don't want to spend too much because you want to make sure that you can sell enough to at least break even so you can make a profit. All right. So there will be some questions about that. Let's take a look at, I think, the first example you'll have in your notes there too. If you don't, just walk it through with me. Vaughn runs a bakery making baked goods that he sells to cafes. He owns the van that he uses for purchases and delivery. His revenue expenses for 1 month are as follows. So calculate Vaughn's profit or loss for the month. So what we'd first have to do, I suppose, is to identify what's revenue and what's expenses. So rent, is that revenue? Yeah, that's an E, that's expense. Wages, so that looks like it's what he pays out, I guess, to his employees. So that's an expense. Sales, that's a big R for revenue. Loan payment, expense. Food, expense. Utilities, expense. Insurance, expense. So these are all things that he's paying out, the expenses. Van insurance, expense. Gas, expense. And then salary for Vaughn. So that's what he pulls in, I guess. That's Vaughn runs a bakery, owns a van. Salary for Vaughn. That's a tough one, actually, what salary for Vaughn is. What would you think? The revenue or expense? If it's for the business is paying that out, I guess. If it's for Vaughn, right, he gets that. Calculate Vaughn's profit or loss for the month. All right, well, that's a good question. For the business, it would be an expense. And since this is not him paying all this out, it's I think you should look at it from the business perspective. So this would be, that would be an expense for the business. Yeah, so the only revenue is the sales. So you add up all the expenses and take note of the revenue and find out what the difference is. So for A, here's the breakdown. The sales are the revenue and the expenses. Now I see there's a typo here, so I'm actually not sure if this is, that should be 2,200.
Yeah.
Did anybody get 10,646 or did you get 846?
No, I got 646.
This is, okay, so those of you that did this one, that's the answer you got? Okay, so there's a bit of a typo here in this page. Okay, well, what does it look like to you? Did he make more than he spent or did he spend more than he made? Looks like he spent a little bit more than he made. So we definitely have a loss for the month for that one, and it is a loss of 646 for the month. That's the difference between the two. So B, what would Vaughn's sales have to be for the month to break even? Well, you just add that number that was the loss, you add that to the revenue, and this is the new revenue for his break even point. So again, he lost this much, so if you added that to the revenue, it would be he would have to make sales of, yeah, he would need 646 more. Or he could cut some of his expenses, but I think this is just if you want to increase sales there. All right, so if Vaughn cannot increase sales, he would have to decrease his expenses somehow. So if the question asks for what kind of adjustments or suggest a way for him to break even, you'd have to come up with some kind of ways that he could shave off some expenses then, okay? So reducing the hours of some employees, perhaps, buy less expensive food, decrease his own salary perhaps, and that's what some business owners do, they decrease their own salary to break even sometimes, okay? So any questions on that one? All right. Okay, so Serge, you can do this question on your own about Serge running his delivery service. Okay, to round off the last little bit of 8.2 here, so making profitable business decisions. I'm not sure why some letters just randomly get deleted here. That's kind of interesting. When you own a business, you must make decisions that affect its success and profitability. For example, if you run a retail business selling things to people, you have to set prices high enough to cover the cost of materials and your other expenses, but not so high that you turn customers away. A number of factors can affect the success of your business, including the location of the business, okay, where you buy your goods, okay, where you buy your goods, how much you charge, your hours of business, the number of employees, how you advertise. So all of these can affect your bottom line. So this question here, the example says Parker owns a home renovation business. He's estimated that the cost of materials for clients' renovations will be $5,685. And the job will take 18 hours of labor to complete. Parker's deciding whether to charge the client the cost of the materials plus $35.50 an hour, or a flat rate of 115% the cost of materials, which would give Parker a higher income. So there's two different things here, the cost of materials plus $35.50 per hour. So that would be this much plus $35.50 times 18, right? So you add those two numbers together, and that would be option 1. 115%, that's pretty easy. You take this number, and you multiply by the decimal form of 115%, which would be 1.15.
That would give you like 6,000.
Okay, so let's take a look at the two answers that we should get there. So the cost of the material plus the hourly rate would give $63.24 for a revenue there, his earnings. If he charged 115% of the material cost, so just 15% of the materials for his own, then he would make $65.37. Which one is greater? So the 15% for him would be higher income. So if he took longer, if it was a longer to do and he charged hourly rate, he might make more money. Lots of times a homeowner though, if they see you're charging per hour, sometimes they're going to be really concerned about how fast you're going, right? If you charge just 15% for your own, they know it's a fixed rate and they know that you'll want to work fast. They know that you'll want to work efficiently because they don't want to be, because the worker doesn't want to be there for too long because then now you're starting to lose money, right? You could be working somewhere else. So the only concern for the homeowner would be, is this guy taking his time and making a good enough job or doing a good enough job of it, right? Or is he rushing or cutting corners, something like that. So these are all things you want to think about. Number 2, so B here, assume Parker charges the client the higher price. He hires 2 employees to complete the renovation in less time. They can complete the job in 9 hours, but Parker will have to pay each employee $18 an hour. what is Parker's profit after paying his employees? So he charges the 15% on top of the supplies, but then he has 2 employees at $18 an hour for 9 hours. So that's like $36 an hour for 9 hours because there's 2 people. So what's that? Well, if we take a look at that, then this is what the answer should look like. So he has a difference of, he makes $852. That's the total difference between the cost and what he's charging here. So 2 times $18 per hour times 9, that's $324 that he would have to pay his employees. So then you subtract that from his profit, and you have 528. So he would earn a lower profit, but he wouldn't have to work as hard, and he'd get it done quicker. All right? So again, you want to decide if you're considering this business model or these decisions, you want to consider what's more important to you. You know, can you work hard and take a little bit longer time and get more money? Do you want to work a little bit less and take just a little bit less profit, but have other people help you? Suggest 2 changes the Parker could make to earn a higher profit. Any ideas for this question? What kind of changes could be made? Anybody? I know some of you have done this question. What'd you write down for C? Yep. Okay, he could do it himself and not pay the people. Okay, yeah. He could also just hire 1 employee instead of 2. That might help. Or do the work himself. So you got that first one. Again, where is he getting his materials from? Could he shop around for a deal or look for a promotion? Okay. And he could increase his flat rate instead of 15% of the materials cost. He could up that to 20%. Okay, so different things that he could do to make more money here. All right, so you guys, here's your build your skills questions, and complete the questions that you have in your notes, and that's the end of the 8.2 lesson. Anybody have any questions about 8.2?